Yes, crystal clear. Perfect. Lalit Bill. Okay. I like crystal clear. Let's see. Do I have all the right screens? All right. I think so. All right. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. Trading psychology is important. Please, first of all, welcome on YouTube. Thank you for joining us. I really appreciate this. Trading psychology is important. Let me give me 1 second. Sorry about that. So trading plan is important. I encourage you to keep a trading plan, and most important is risk management, right? Cash, number of positions, and position size. And then I would create a checklist. Have a checklist that before you place it, go and enter a trade, I would have steps, right? And in those or check marks, right, in your journal for every trade. One check mark would be position, right? Cash, how much portfolio, how much cash do you have in your account, and if you're breaking that rule. The second, I would put number of positions, and then the third, I would write down as a column how much you risk it to support your decision. And in terms of risk, no more than 2.5% of account value per position. If you hold in overnight, if you're doing day trading, I would propose less than 1% of your portfolio to risk. So this is very important to avoid trading on kind of emotions, fight response, and positive negative visualization, right? That can help you determine this. The other thing that I find very useful, at least for me, is looking at positions beta. Right? What's the correlation with spiders? If spiders are down 1% and you down 1%, I think that's okay, right? Market is down 10%, your portfolio is down 10%. Then, you know, I mean, it's not great, but I think it's normal. But if spiders down 10%, your portfolio is down 20% or more, I think that's an issue. That means you have too many positions with high beta. And same is if you're trading options, I would look at the portfolio delta. Right now, it'd probably be market neutral, because I think market short term is getting to these overbought levels. Long term, it's still in downtrend. And the medium term, long term, I think it's neutral, but medium term, I think there's still another wave. So I would be market neutral at this time. And, I mean, if you think there is more room for the rally, then maybe you could be slightly bullish. If you think there is more room to the downside, you could be slightly bearish. But I would keep your long and short positions at the same time. Some of the other items you can put on checklists, if you think the trend has changed, check marks, in your journal. A lot more time, right? If you're bullish, maybe I would go into May. If you're looking at the 200-day moving average, that wasn't enough, then maybe you now look at the... So in terms of stock forecast toolbox, it's long. Excuse me. For stock forecast toolbox model, still bullish. So it's still bullish. It sees momentum behind the bulls. It doesn't see a break below 575 now, or 570, and continue to grind higher. Right, next level is 580, 585. It's actually turning bullish, saying that based on the current momentum, we can reach all-time highs, kind of V-shaped recovery. I mean, I'm not sure. I don't agree with. I mean, obviously this can happen, right? If we already had a rhetoric that Canada and Mexico might be exempt from the tariffs, right? And that's actually happens, right? And China maybe minimal taxes in European Union, maybe some of the industries get exempt, maybe some of the countries get exempt, right? If they back off the rhetorics and we're starting the earnings season, right? And the earnings are good, then we could have a V-shaped recovery, right? I would say that that's not out of the realm of possibilities. But if I have to assign the odds, I think it's low probability, right? I think revisiting 610 is a lower probability. I still think that based on such a sharp pullback and very kind of a slow grind, I think we're trading on wave B, and we basically recover what, half of the. One more time. We went from 550 to 575. Right? 580, I think it's 50% retracement. Right, so 30 points here, 30 points here. So this is 50% retracement. That's kind of a classical, retracement. I mean, sometimes you get to that 62, 68%, right? So 590, kind of. Right? But I still think this is wave B, right? And probably wave C is coming, right? Because the momentum behind the bulls, main reason for this is that once the model runs in the next 5 days, right? We already went into March with deteriorating momentum, only 2% up. Most likely, long-term trend is probably going to be slightly negative now, if I have to guess, because we've traded, we dropped below 584 by 6% to 550. That means that momentum has changed, and I think long-term momentum is actually turning negative now. So from that is one of the main reasons that V-shaped recovery, even though it's possible, the odds are less than another retest of the lows. Good morning, Fred. How are you? Any questions? Meanwhile, I mean, we're above 565, right? That's the December lows, right? We're right at the January lows. We're above December lows, 565. And that's also July, August highs. So as long as we're above 565, 570, that's the gap, right? There's a lot of support at these levels. That's good for the bulls, right? So so this gap, as long as this gap is not far in control, right? So this is your first support. If you're doing day trading, if you're doing maybe, holding position for a few days, I would use 570 to 565 is your support. When you're trying to say, okay, Vlad, I think it will get to 580 or 590, great. This is where your resistance is going to become. Right, first is 580. I think that's pretty long-term resistance, which is going to be difficult to break. And then 590. I mean, the only way we can break this, probably the earnings season has to be, indicating that it's better than expected, or Trump actually abandons some of the aggressive rhetoric on tariffs. Any questions? In terms of support and resistance. Meanwhile, spiders are flat, banks continue to outperform. So we had a sharp pullback in banks. And I mean, banks actually, XLF looks like a V-shaped recovery, right? So stocks like JP Morgan, you have a sharp rebound, stocks like Morgan Stanley. You do have a pretty steep rebound in some of these stocks. So that's good. NVIDIA and Broadcom are stalling. They are underperforming technology. ETN pullback. So industrials are also lagging. ExxonMobil continues to grind higher. Fred liked that signal, okay. General Electric is going higher. GE is breaking out to all-time highs, so that looks strong. Capital One Financial continues to recover. And Amazon is stalling. So the technology is underperforming some of the value stocks, like banks, financials. So 10-year yield is at, you kind of pinned to 4.3, right? A little bit higher, a little bit lower. Dollar is also stable. 10-year is stable. That's bullish for the market. High yield has recovered nicely. That's bullish for the market. VIX 17 handle. That's bullish for the market. Sharp recovery. Value stocks are leading the market today. So value stocks are actually right at that 50-day moving average. So value stocks are outperforming. Let's see, small caps are now grinding higher as well. We have financials, regional banks also rebounding today. What else is interesting? Germany pulled back. I like to look at my favorite, Bitcoin. Okay, Bitcoin is stable. And it's stuck between 50 and 200-day moving average. NVIDIA pullback, sharp pullback in NVIDIA. That's problematic, and copper continues to move vertically, move higher. It could be tariffs. It could be proxy for better economic expansion. But usually higher copper prices are positive. Any questions so far? All right, we have a lot of people today. Thank you for participating. Alon, Brian, Fred, Kevin, Kula, Elite, Larissa, Louis, Mario, Martin, Peter, Tahir, TBC, CRN. Ted is back. Bill. Okay. All right, let's review some of the positions and see if we want to make any adjustments. Okay, so Amazon, I'm long Amazon. Continues to grind higher. I have a combination of both options and stocks. So let's look at probably a little bit too much exposure to Amazon at this point. Maybe need to start trimming more. So let's think about it. Okay, so I have April called. I have a stock 206. I trimmed it at 201, so maybe trim it at 206. Right, that's another 3% gain on Amazon stock. So let's trim maybe half of the Amazon position. And again, I have, if you have both stock and options, again, you can look at the beta. If market is up 1%, but Amazon position is up 5%, you probably have too much Amazon position. So, but most people either trade stock or options, right? That's based on our surveys. So if you only have stock or you only have options, just look at your exposure and see if this is something you're comfortable with. I would say that if the market was up yesterday, or 1%, but your Amazon position goes a lot higher than 3-4%, then maybe it's time to trim. All right, Amazon. So let's trim half of Amazon position. Okay, so I'm going to trim half of Amazon's stock position. Okay, I'm waiting for it to fill. Okay. And then so I did trim half of the Amazon stock position. So continue to trim it, right? I closed half at 201, now half of 205.10. And we'll send alert. And then maybe close the rest of the, let's look at Amazon. And the next stop is 50-day moving average, right? So 214. So maybe close the rest of the position, 214. At 214. Okay, so my exit strategy 205, then 214. Options, let's see how the options position's doing. So the spread is bought at 428, trading about 460. 460, so it's up maybe 10%. And single options are not going anywhere. Okay, so let's send that alert. Where's our friend alone? Please send alert for closing half. Okay. Okay, so that's Amazon. Any questions on Amazon? All right, let's keep going. Broadcom. Right, so I do have a Broadcom position, AVGO. Broadcom and semiconductors kind of stolen right between 180 and 200 level. Nvidia is turning negative, so that would be a bearish argument, right? Why are semiconductors not leading this rebound? All right, so for now, let's see. I am down actually what 50% in Broadcom. It is an April position, so I have a little bit of time, but not a lot of time. Right, this is April expiration 3rd. We have 3-4 weeks. 4 weeks. Okay. So for now, no changes to Broadcom. Capital One Financial, both stock and option. The financials are doing okay, leading the rebound. Capital One Financial is rebounding. So for now, looks good. I mean, as long as it's above 20-day moving average and 50-day moving average, I think it's pretty healthy rebound. I would trim probably at 190, right? Because this was a kind of a support that we talked about it before we entered the position. So now this is going to be overhead resistance, right at that 50-day moving average. All right, Capital One Financial. ETN, new position. For now, it's kind of not going anywhere. General Electric is doing better. It's actually pulling back. Let's see how's industrials doing. Industrials are actually at 50-day moving average. So ETN is not doing that great. For now, it's a stock position. I put a small position holding. Let's see. General Electric, we talked about General Electric continues to go higher. Morgan Stanley, both stock and option position. Both stock and option position. Let's see how we're doing with Morgan Stanley. So it continues to grind higher. Let's see, do we want to close the spread maybe? Yeah, spread looks pretty good. I would close the spread. Still have a stock position. Spread is actually at 550. And it's more than 50% up. So let's close the spread. On Morgan Stanley. Let's see, 550. Okay, so I'm still in Morgan Stanley stock, right? I'm still in Morgan Stanley stock, but I did close the Morgan Stanley option position. Yeah. So I bought it at 370, closed at 550. Please close. Please set to close. Morgan Stanley option position. Spread. Okay. All right, so continue to trim position. So now I'm closing option Morgan Stanley position. Still gonna hold this. These are leftovers from the calendar spreads for the earnings. And finally, I still have a half of the spiders hedge. So I left half of the hedge. It is down 50%, but I think it makes sense to at least hold one hedge for spiders, right? 575, 580. So, I don't know exactly how far the B wave, where the B wave is going to end. What are some of the news? Let's see. I mean, consumer confidence was not good and kind of no reaction. Home sales were okay, I guess. No reaction. What do we have today? Durable goods. Durable goods. Better than expected. Neil Kashahari usually can cause some volatility in the market. When is he speaking? 10 a.m., so in 13 minutes. I mean, I don't see any new signals in yield, right? I don't see any new signals in high yield, or junk bonds. Spiders, no new signals, so kind of a muted reaction for now. Okay, tomorrow, initial jobless claims. Obviously, if it's a big move left or right, it could be an issue. PC data. Yeah, I don't think there's any news that can move the market right now, except new administration, right? So as long as new administration doesn't provide new information, right, something that you do not expect, then I think we can just slowly grind higher, kind of what the model said here. Not 6 months, 10 days. Let's see. 580. So next stop is 580. We'll see if we get to it today. Model thinks we can get to it today. Okay. It doesn't look like it wants to get to that today, but we'll see. Okay. Crude oil continues to grind higher on tariffs from new administration, right, on Iran. Kind of be more strict with some of the sanctions on oil imports from Iran. Let's see what are the other news. Let's look at the gamma. See if gamma has changed anything. So US consumer confidence dropped reportedly yesterday, fell to 92, the lowest since February of 21. Okay, so consumer confidence, we know that sentiment continues to deteriorate. On March 25th, President Trump reiterated that tariffs set to begin April 2nd are on track, though he hinted at flexibility, saying he may give a lot of countries a break on tariffs. This mixed messages reported over the past day keeps market uncertain. Okay, I agree with that. Okay. FBI launched a task force to investigate threats and attacks on Tesla locations. Okay. You did recover, right? After negative news yesterday that your sales in Europe dropped more than 40%. It's actually grinding higher. So that's good news for Tesla. Looks like no sellers are left, or very few sellers are left. Gold prices dipped today. Okay, so gold kind of stolen. Actually lifting minings and industrial stocks, not ETN at least. Okay. KD, let's see. So KD had earnings. Does not look good. Leonard had earnings. Does not look good. Okay, home building is not in good shape. Not in good shape. That's the bear home builder activity. Okay. What about gamma exposure? March 25th, March 20th, April and May. Okay, let's see. How's the position? Has it changed? Okay, so some overhead resistance, 570, some support. Not a lot of position here. Yeah, so 560 looks like a strong support, 570 looks like support, 580 looks like overhead resistance, 590 overhead resistance. This is incredible. I mean, it's either a mistake or all the hedges are in one day, right? March 25. I should do March 26. I don't know why we're showing March 25. Let's see, can you refresh? Let's look at something. Is it refresh? Yeah, March 25th. Okay, so this is something we need to. I don't know if you guys have any questions. So okay, sorry, this was from yesterday. Okay, give me 1 second. Okay, Okay, actually, I just looked March. So gamma in SPX. Let's see. Let's do SPX. March 26th, March 27th, April 17, April 16. Okay. Let's look at gamma. So 5,700. So that matches. Let's see. So I'm just looking at ETF versus index. We do have support 5,700. Right, so 5,700 big support, puts buying 5,600, relatively big. And then overhead resistance 5,800. So you can see we're at 5,777. So 5,800 is big. Wow, 6,000. I haven't seen that. So a lot of selling, call selling in 6,000. Okay, so it's definitely going to have a hard time breaking through 6,000. And then total gamma. Okay, so March 20th, so this makes a little bit more sense. So this is what, $20 billion. So $20 billion in 0 days till expiration, but April, okay, well, $30 billion. Should start looking at SPX, probably more informed data. Okay. I mean, still a lot of gamma, right? So 0 days till expiration, driving the market for sure. And April. So if you remove that, and if you want to day trade and just see what are your positions. Well, you definitely can see that, right? Today, unless we have some positive news, market is going to have a hard time breaking through 580, right? This is just today's expiration. I guess 575. What is this? 572 and a half. Some position, not a lot, but some position. Futures is actually doing good. Where's the futures? This is delayed stuff. The futures, we're right at the January low. Right, it's okay, stone. So spiders for now, not going anywhere. All right, any questions? Consumer confidence, consumer acceptance is yeah, it's too optimistic. My spending number is too optimistic. I mean, I know that just sentiment in general, right? If you look at the bulls and bears, bears chart, bears sentiment. Minus 36%, right? So if you do, can't do math, but even 5 year. I mean, these are extremes that we haven't seen since 22. So you know that everybody's bearish, and usually that's a good contrarian indicator, right? If everybody's bearish, if nobody wants to sell Tesla, you take the opposite side, right? But it takes time. This is not a perfect timing indicator. That doesn't mean we cannot revisit the lows, right? So that's the only thing. But I mean, sentiment across the board is very bearish. Any question? All right, let's see what else is cooking. VIX is not reflecting bearish sentiment. Well, you know, I mean, it's definitely not at 30, right? That's more of a panic and elevated fear. Recent lows, or definitely, you know, last year lows, 12. So I would say it's still elevated, VIX, but VIX is it's not a sentiment. VIX is you know, demand and supply for puts. You can see if you look at the SPX, I guess nobody's buying puts. Not a lot of people are buying puts. Well, this is year-to-date expiration amount to this Friday, April 17th, right? I mean, that's where majority of the buying puts should be. So let's look. I mean, you do have $15 billion worth of gamma exposure and puts, but you know, you can see a lot more people are interested in 6,000 calls, right? Selling the calls. So, I mean, you don't see any pronounced move, you know, position. I mean, 25,000 contracts. I mean, almost, what is it, 80, 90,000 contracts at 557, 570 level, at 560 level, about, what is it, 100,000 contracts. I mean, these are large positions, but obviously not to, you know, they don't look like 6,000 where there's, you know, 300,000 contracts, 3 times more contracts. So obviously people are now more interested in selling calls than buying puts, and that's why VIX is lower. Below 565, if we're able to close this gap, right? If the bears are able to close the gap, then you'll see a lot more put buying. But for now, you know, people basically see the short-term momentum behind the bulls, so they're trying to target some of these strikes on the way up. And that's becoming kind of an overhead resistance. Let's see. So the idea is that dealers are long gamma, right? So dealers are long net long gamma here and here and put. So that's good. Buying dips and selling rips, right? So they're buying dips and selling rips, okay, which stabilizes prices. These levels often act as support if it's below the price, or resistance if it's above the price. Okay, so this is normal distribution, right? Negative skew on spiders, people buying puts, selling calls. So that's okay. Around 57.50, where we are right now, gamma is described as neutral to positive, suggesting a pivot point where dealers hedging keeps volatility low. Below 577, gamma turns sharply negative. I would say probably 56, 565, the gamma will turn sharply negative. That means that dealers will have to sell the stock if they're going to be gamma negative. Right, they're going to sell into this sharp pullback. So I agree. I think if we close this gap, if we're going to start closing gap, gamma is going to turn negative, and the sell-off will probably accelerate. That's where you're going to see VIX jump, and people are going to start buying puts. Let's look at futures. Talking about apples and oranges. Yeah, so for 57.50. Yeah, it's the same thing, right? If it dropped, if it closed the gap and removes all of the gains from, what is it, Monday, that's when things are going to get bearish. Okay, so nothing new. Okay, any other questions? Amazon is losing positive gamma. I mean, positive momentum. I mean, the market is losing, right? It's stalling for them. Let's look at Amazon. Yeah, you do have pretty sharp pullback. I mean, same thing. As long as it's above 2,200, I think that's fine. Did I close? And what did I do with Amazon? I closed the stock position. I mean, right now, obviously, most of the stocks are higher indexes, right? So QQQ turning negative, right? So QQQ turning sharply negative, right? Not sharply, I mean, then, you know, Amazon obviously following the suit most. We already saw that with NVIDIA. I mean, my opinion hasn't changed, right? We looked at the gamma exposure and positioning, so I wouldn't react to this short-term fluctuation. But, you know, anything above this, I at least short-term, anything above this gap, I would say bulls are in control short-term. If we close the gap, right? Yeah, you know, anything here, I would say neutral, right? So as long as we're the gap is not closed, it's positive. If we close the gap and drop below 565, I think that we would be neutral, you know, and obviously I would use this as a support 550, and that would be net negative. So for now, I would watch this buffer zone. Right? As long as bears are unable to close this gap, then, you know, bulls are in control. Doesn't matter what I think, right? You just kind of trade what you see, right? That's our favorite new phrase. Credit put spread on VIX. Well, yeah, if you think that leg C is coming, then, I mean, you can buy puts, spiders puts, you can buy spiders put spread, you know. Based on the gamma, I think the sell-off will accelerate, right? Just like they said here, if we drop below 570, right? So if we are dropping even one level, right? The sell-off will probably start, and VIX activities probably start accelerating. This is fine, right? Futures contract. This is not a, oh no, that's not futures. This is SPX. All right. So if we drop below 5,700, right, then you might start thinking about buying puts, but I would say below 565, because I think this will act as a support, at least today, right? It's a pretty large gamma or pretty large open interest, so I don't think we're gonna drop below. I don't know what assuming no new news, I don't know what the news are, but assuming no new news, if you're short-term aggressive trader, I would actually buy at 570. Right? If you're short-term aggressive trader, I would buy at 570. And it says 575. Before I start, selling credit put spreads on VIX, in my opinion. All right, guys. I think that's all I have for today. Alon, Brian, David, Fred, Arminder, Kevin, Kula, Lead, Louis, Mario, Martin, Peter, Steve, Tahir, Ted, Bill, and everybody else. Thank you very much and have a great day. Keith will be doing the closing bell today. Thank you.